Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is the 29th of October, and we have Brent crude oil trading this morning a little bit unchanged after the dramatic fall of yesterday. Oil is a little bit down currently. It's been popping up and down a few cents this morning in Asian trade, but at 71.37 on Brent, and of course WTI a few dollars back after a fairly substantial $6 or 6% move yesterday. The question I suppose I will pose this morning to our first speaker, Ram Narayanan, Director and Vice President of Strategic Market and Business Development at Vedanta. In this oil market where the habits are to buy the rumor and sell the news, if selling the news was selling the news of the events of the weekend with the Israel strike in Iran, what is the next news? What is the buy the rumor, the next news sell?
Well, I think I was discussing with my team today morning, like who is going to win the elections in US next week. And I think that will set the tone for the commodities as well as for oil. I think one of the reasons would be like, if Trump wins the elections, it will lead to a stronger dollar, probably put pressure on commodities. And the other way around, if Harris wins. That is on the lighter side. That's the first thing. But I think the next big news would be what will OPEC do sometime in December? Will they continue with the supply increases? That's a question to be watched. The reason being, we have seen what has happened in China. China, beyond the stimulus package, the stimulus package has had its own sets of ups and downs. The stock markets went up. I'm sure some people made money in that. But the consumer spending has not increased, which was supposed to be there. Some more stimulus package has been announced last week. But it's not led to major pull in the economy. So therefore, the question is whether OPEC will continue with the supply increase is a major thing that's going to be watched. I think in the background, like we all know, Saudi Arabia is not targeting $100 per barrel oil anymore. They are very content with what they have, as long as they retain the market shares. And similar thing for the other oil producers also. So I think it's going to be pretty interesting next month and a half, US elections, OPEC, and what China is going to do. These are the 2-3 major factors which I feel will drive the oil markets, mainly from a news perspective.
Let's welcome Andy Lavin, Managing Director of Econs. Andy, as is the habit of many financial markets, overreacting. Did the oil markets overreact yesterday with such a dramatic drop-off? I mean, the draining of what one presumes was the geopolitical risk premium. Your thoughts of the overreaction or not yesterday?
So I think the overreaction was probably in advance. So everybody was trying to get ahead of what they thought was going to happen, which was probably an expectation of a major hit by Israel on Iran, and it never happened. So I think it was the air coming out of the balloon that you saw when the prices dropped, more than an overreaction to effectively a very limited action on Iran by Israel.
And on that point, the sort of first point made there, Andy, to Ram, what is the next rumor sell, buy the rumor, sell the news, do you think that this market's looking at?
So I think the real big question is demand. Okay, everything else is reaction to demand, and it really is, where's the demand going to come from? I don't see there being really any green shoots of growth in terms of demand. There's just a bunch of questions. So the kind of rumor is, oh, look, there's a green leaf of shoots of demand growing in this country.
I cannot hear. Is that me or is that?
I can hear you, Sean.
Yeah, you can hear. Okay, great.
Yeah, can you hear us?
Perfect. Yeah. Yes, I got the audio back. Robert Perkins, Managing Editor, Downstream Oil News at for EMEA, that wonderful old acronym. It nearly seems cute and quaint at this stage. Europe, Middle East, and Africa for S&P Global Commodity Insights. Robert, there was a sense that the downstream, the refiners were getting some of the wins earlier when in this cycle when there wasn't there for the upstream. Where are we at with the refining cycle now going into the winter months and the margins there available or not in this current cycle?
Yeah, hi Sean. So we've seen quite a clear trend now from the earnings already posted to some of EMEA's big refiners of a sharp drop off on the second quarter. You know, and obviously refining margins off those huge record margins that the refiners were seeing in 2022 and post-Ukraine Russia war that they experienced, and nowhere near those kind of levels. I think Galp was forecasting around $8 a barrel for the fourth quarter, slight uptick on the third quarter. Things seem to be stabilizing product cracks, sort of looking in the next sort of 3 months or so. A fair amount of weakness on the gasoline. Diesel seems fairly steady. But there's lots of, you know, sort of near-term question marks, and obviously it always depends where you are in the world. In our part of the world that we're looking at, EMEA, very much the market is focused on the ramp up of Nigeria's Dangote refinery, Africa's biggest now, that's brought its gasoline production trains online, and that's starting to have an impact on trade flows in and out of Nigeria. You know, one of the biggest fuel consumers there in Africa, and it's already having an impact on some of those margins and trade flows and that were used to be flowing inward and now flowing outward from Nigeria. So overall, sort of a muted picture, but an expectation of a little bit of a pickup in margins, I think, for our part of the world at least. Asia, of course, is not doing so well on the refining side of things, but generally a little bit better than it was in the second quarter.
Ram, looking at Asia, Robert mentioned there, where are we with China? The data continues to be softer, not encouraging, but yet we still sort of hold, or at least the markets, at least the bulls hold hope that China stimulus is going to find its mojo again. How much can we rely on China-Asia demand to lift this market, to be that sort of rumor to the news in the next cycle, going into what is sort of a winter peak or demand period for China? The Chinese New Year, usually a good time for building up stocks there. Your thoughts on where China's at?
Yes, we did see the stimulus package from China that happened just before the October 1st holidays. But still, then if you look at the consumer spending numbers as well as the travel numbers, it's not been a major increase in China. And as I said before, the stock markets did move up. In fact, what has also happened is many of the financial markets, they moved money from countries like India to China. So therefore, the Indian stock market actually has gone down over the last week or two. So therefore, and again, the Chinese market again has sort of tapered off. So therefore, in the process, I think based on stimulus package, in the process, financial markets have made some money. But looking forward from a demand perspective, as I told you, consumer spending does not look to be very, very healthy. And bugbear, that is a property market, it's not shown any signs of any increase at all, except for a few data points here and there. So on the whole, the Chinese economy is going through a transition. It's moving away from a supply-oriented economy to, let's say, a new energy and to some extent a consumption-oriented economy. So therefore, any such kind of stimulus packages will have its limited upside. So therefore, going forward, any signals from any stimulus package or any signals from China, I would presume is going to be soft. Of course, we might see some temporary blips on the screen, like before the Chinese New Year consumption or something of that sort. But I would suggest looking from any product's point of view, any commodities point of view, I would be a little bit skeptical about putting a big bet on China to build the mojo back into the markets. In fact, if you look at the latest IMF estimates, they have estimated the Chinese GDP growth for the next 2 years to be at 4.6, 4.7%, if I remember right, and not at 5% because of all the issues that's going on. So therefore, if you ask me, I would be a little bit soft on China right now. It's going through a transition, and that's how the commodities market should.
And clearly, India or elsewhere in Asia is not offering any kind of a sufficient scale of uptake of what China is leaving on the table.
See, that's what I'd say. India is a 4 trillion economy. China is a 17 trillion economy. And then if you look at oil demand, China 60 million barrels per day, India is 4.5, 5 million barrels per day. So even if India grows at 8 to 9% and China grows only 4%, you can do the numbers. So therefore, obviously, India and other countries put together, let's say countries like Vietnam and Indonesia, will not be able to add up to the numbers. So therefore, we are in for a structural weakness in the market if at all China slows down. Yeah, of course, there are bright spots in all these economies, but still, then if you look at the sheer numbers, I think China had much more to offer, which is slowing down right now.
Andy, we have in Riyadh in Saudi Arabia this week the sort of what they call the Davos in the desert, the Future Investment Institute conference, the FII Institute conference, and the great and the good of the Wall Street and the City of London pouring in search of those petrodollars. But of course, we've got Brent closer to 70 than 80. The last time prices were at this level before the recent Iran-Israel crisis, OPEC Plus made the decision to postpone output increases. And looking at what's going on in Riyadh, you think they're going to need a lot of money to pay for this great new vision of 2030 and all of the giga projects there. Where do you think OPEC Plus and most notably Saudi Arabia is with its decision to increase supply come December 1st, which is now only a few weeks away?
Unless there are some obvious signs that demand is picking up, I can't see OPEC doing anything other than continue with their levels that they've already announced. To do otherwise would just be to be pushing the oil price down, and that's not going to help anybody in OPEC, never mind the Saudis, who have built their budgets based on much higher expectations in terms of their revenues. So I think they've got a problem in the making, unless there is something which really is going to move demand up. And I do worry that we've got so used to China kind of arriving over the hills as the white knight to bring demand back, when actually, as Ram says, they can't keep growing demand. They're going to switch their demand to domestic energy, and therefore it's going to have an impact on how much energy comes in from elsewhere in the world. So I do think we're starting to see something shake out that may be more of the same in the future years.
When you think about the noise that has been percolating around OPEC Plus, Andy, in recent weeks, it's been around the sort of growing perhaps disharmony, frustration with those countries that are not complying with the cuts, most notably Iraq and Kazakhstan. And so some desire to sober up those countries with a bit of a market share price collapse. I mean, we're getting the price collapse as it is at the moment, although, 70 is still not 60. But where do you think that this entity, this sort of mammoth 22 countries of OPEC Plus holding together again, are there sort of overselling the idea that there is stress in the group?
I think there is stress in the group. Whenever you've got oil prices down below the levels that collectively they would like them to be for stability in their country, then there's going to be tension. The challenge is what you do with it. When they had the last go at it and said, we're going to have market share, there was a very, very painful response in the market. So you kind of have to ask yourself, is that the right answer? I think what you'll see is I think there'll be a nothing of diplomatic pressure to try and get everybody to play the same game as much as possible to bring some stability rather than uncertainty.
The situation as we see it at the moment, Robert, in China, and we've talked there about the oil demand, the outlook for that, and it's generally somewhat sober as it has been all the year. But we're now also seeing China's refinery output dropped to over 5% last month versus a year earlier, and that was the sixth consecutive month of declining refinery outputs. How do you interpret that? What does that mean for China's exports to the rest of Asia in terms of products, which of course is a big factor in the market east of Suez?
Yeah, I mean, for sure, as we've noted, the China demand slowdown, is the key driver, I think, in terms of where the market is looking for the capacity on the run side of things, and on the products, over the coming couple of years. We've talked about the stimulus package. There's a meeting next week, I think, the China Congress meeting, bring some more potential fiscal easing. They'll have maybe a read through on that in terms of policy stimulus on oil demand. But I think the overarching picture for us, I think, is where we are in the demand curve for China. I mean, S&P Global Commodity Insights itself is sort of predicting a peak essentially for the main product groups, excluding crude burn and NGLs, within the next couple of years in China. You know, this is going to be the first developed country, first developing country really to sort of to hit peak oil demand in the coming few years.
How is that going to be reflected? I mean, that's we're seeing already, and some major leaders in the industry, those most notably in recent times, the CEO of Vitol, Russell Hardy, saying peak oil gasoline demand in China is already there. Diesel probably not far behind. How is that being reflected in what seems to be an ever-increasing refinery capacity build still in China? What are they going to be making?
That's right. I mean, it is an interesting puzzle, I guess, depending which way you're looking at it. It's as
I mean, ultimately, it must be for export markets, right? Like India.
Yeah, export markets. You know, leading the demand pool, of course, as always, is the jet and petchems. So you know, increasingly refiners are going to have to be you know, figuring plants towards feedstocks and for the petchems and jet. You know, we're getting the inflection point now on jet. We're pretty much back to where we were pre-pandemic levels in terms of jet demand, and that's going to grow for the next possibly decade or so, depending on whose demand projections you're looking at. So again, you still have that end of the products barrel to grow, and obviously petchem is going to lead that forward, and yeah, regional markets will be a strong part of that pie. But as always, it's going to be the plants which are less well geographically located, structurally weaker margins, and more sensitive to oversupply, that could suffer and may have to close. You know, as it's the International Energy Agency and many have pointed out. That, and in fact, it was only a couple of weeks ago, wasn't it? The IEA was saying that we're facing a potential supply overhang within this decade alone. So that could.
Well, I suppose we're going to see more and more refineries in the West, aging carbon-heavy refineries closing and creating space for these new, more higher-valued, lower-carbon refineries in Asia. Let's go to the survey question and see where the room's view is on the points made earlier, leading off with, in the age-old tradition of the oil markets, buy the rumor, sell the news. What is the next bit of news? Ram mentioned the U.S. election. We discussed the OPEC plus supply plans with Andy. We haven't mentioned the Fed next move, which of course is only days away as well, and a certain amount of mixed views on where they will go next. More easing, even though there's full employment and fairly substantial economic growth in the U.S., or no news. There's no buy the rumor, sell the news at the moment. There's no wind in the sails anywhere. The doldrums are here for a while. But which of these do you think is buy the rumor, sell the news? What's the next bit of news? I'm going to go to you, Ram, on that. Obviously, you mentioned the U.S. election. What's in the U.S. election that could be the rumor to the news that you're pointing at that could move this market?
Yeah, obviously the first point is, let's say in case the Republicans win, the first thing is the positive strong dollar. That is number one, which can put pressure on the commodity prices, especially oil. That is number one. And number two is demand can take a sort of a hit in case Trump wins, and he has been talking about tariff wars, he's been talking about tariffs on China. So that can upset the global order. So that is number two, which can put pressure on the oil markets. And third thing is about the views on fracking. Trump has been pro fracking. Trump has been pro all the oil and gas companies. So therefore, like, this can lead to some talk saying whether the U.S. Oil supply can increase and what are the paths towards decarbonization. So that can also affect the market. So therefore, this 2-3 points which I feel can affect the markets. In case the Democrats come back, Democrats retain the White House if Harris wins, I think her views are slightly more different. So we get different views on fracking, different views on global order, which can go the reverse way around. That's the way I look at the U.S. Elections, and also, like, the U.S. elections can also affect the way the global order is going to be. Will it be, if Trump wins, will he be effective in putting an end to the USA, to the Russia-Ukraine war, as well as Israel, because he's been known to have some strong views on that. So that's another thing which can play on the markets. So these are all a whiteboard fantasy thinking which we are trying to do. But yeah, these are things which can happen. Come 5th of November.
Andy, your thoughts on that? I mean, the US election obviously is a major, major event with tentacles into so many different things. Is it a market mover for the direction of travel on the oil market? I mean, this is a market that's been stuck to $70 for some time now, except for this exceptional moment of the Iran-Israel face-off. It's back to where it was. What do you think coming out of the question of the survey, and what could give direction coming out of the US election?
Well, I think in reality, if whoever wins, nothing's going to change until next year, which is in the oil markets years away. I think by then we'll have had OPEC, we'll have more figured out to China, more fundamental things. So yes, whatever happens in the US election is going to make a difference. I think it'll get baked in over time before they actually come to power. And I don't actually foresee them being a radical change from the direction we're going at the moment. It's more going to be driven by the fundamentals, I believe.
But what about when you take something as significant as the war in the Ukraine? This is something that moves with a lot of sentiment and outlook. A few weeks, whether from the election to the actual taking of office, the sentiment could shift quite dramatically if Trump is signaling an end to support for Ukraine.
But I don't see that, in all honesty. I don't see that having a major impact in terms of the flows. I honestly don't believe that suddenly Russia is going to start exporting a load more or producing a lot more. It's going to take them a long time to build back their economy. I don't see the flows that they've created changing dramatically. Even if you were able to say, snap your fingers and tomorrow it's finished, it's going to stay as it is for quite a long time, and it'll change relatively slowly in terms of the flows and the ability of Russia to produce or export more.
Robert, certainly I think one of the big things I'll be watching coming out of the US election is the relationship between Washington and Europe, Washington and Brussels and Berlin and this is if in a Trump victory, this could be the most tested of relationships. All the others seem somewhat predictable, but the European one, and of course, the US have been the big winners in the Ukraine conflict. Biggest LNG now supplier into Europe. Now they're pushing out, it would appear, US diesel displacing Middle Eastern supply into Europe. Where do you see the outlook for that, or what's at jeopardy there, do you think, with the election results?
Yeah, I think that's true. Again, sort of echoing Andrew's point. I mean, I don't see any massive change in that. I mean, the Russian policy or energy policy from the West is pretty much baked in now for the near medium term, at the very least, in terms of what that means for US energy flows. You've highlighted obviously some of the major differences in terms of WTI crude feeding European crude slate to much greater extent, as well as diesel. So I don't think that's going to change. I mean, we've mentioned the Nigeria's Dangote Refinery is one particular sort of blip in terms of pushing out some of the US flows potentially with that huge 650,000 barrel a day refinery ramping up over the next few months, coming up to capacity. Yeah, I mean, in terms of what that means,
does Dangote displace the Gulf opportunity that has come with Europe in terms of the new refineries in Kuwait and elsewhere, or is it displacing US diesel going into Europe?
Yeah, I mean, I think it'll rejig a lot of the markets. I mean, a lot of the gasoline that was coming over was essentially from sort of Europe, but there was bits of the diesel, I think, mostly from the Middle East. that were coming over to Africa, and that they have Dangote has said itself it wants to supply many of the regional markets there. It's already sort of supplying the local markets of gasolines, and that they're getting their spec up to European standards and on other things as well. Jet is already coming over to Europe. So it's going to sort of create certain ripples through the markets that have been readjusting for a while. I mean, one thing I was going to mention in the Russia and Ukraine side of things is which is notable is the drop off in attacks on Russian refineries, I think, which is notable. It looks like Ukraine has kind of given up on its attempt to disrupt the product flows from Russia, which were finding their way obviously through Turkey, through many other countries, and some feeding that demand. So there doesn't seem to be an issue there at all, which could sort of lead into sort of a softer narrative in the near term at least.
Well, let's get that survey result up on the screen and see what the view of the room is. It looks U.S. election, OPEC supply. Ram, you haven't mentioned OPEC, I think, in any of your comments this morning. Everything beautiful there. I mean, it does seem we're 4 weeks away from an increase in oil supply coming into the market. I mean, that's a pretty big deal, isn't it?
Yep, I think I mentioned the opening comments. Yes, OPEC supply increase, if at all it happens. So it's going to affect the markets. And because today we see the geopolitical premium because of the Middle East war that keeps on fluctuating. And
of course, that war is not ended. It's just
exactly.
I mean, they're crushing the Palestinians in northern Gaza as we speak.
Exactly, that's right. So therefore, in case now if you look from the demand perspective, I don't see there is any major mojo is going to come in any of the demand markets, especially from China. So in case, and the dynamics of OPEC, as Andrew mentioned, there's a lot of stress in the OPEC also. So people are angling more for market shares. So therefore, if at all that's going to happen, the OPEC supply increase, if at all it happens, is going to push down the market. So maybe we might see oil going down to around 65 to 70, until there is a sudden flare-up because of what's happening in the Middle East. But my view is oil, if you look purely from a supply-demand perspective, oil has to remain between 65 to 70. And any push on top of that is mainly because of premiums, because of war premium or any supply disruptions of that sort. So that's the way I look at the markets right now.
I wonder if the sort of buy the rumor, sell the news is Trump that he is elected, and that'll be a sell rather than a buy, as compared to the last time when he came to office. It was the other way around. But a big week for all of us. We will wait to see. Will there be? There's still potential that Harris does pull this through, as we keep reading in the polls. This is razor thin in the places where it matters, in the particular states where it matters. We'll wrap it up there. We got Brent crude oil, as we said, trading a little bit unchanged this morning, but after a significant drop yesterday, Brent crude is down slightly in Asian trade, down to sort of 20 cents at 71.26. WTI a few dollars back at 67.21. Be a big day for Brent if they can hold. If the market breaks through that $70 level and sees a 6 on it, as we saw very briefly, it has to be said, in early September, Brent broke below 70, closed below 70 for 1 day, September 10th. It hasn't done that since. Will this be a week where we see a 6 on Brent? That could be significant. That could trigger OPEC Plus from off the sidelines. We'll wait and see. Andy Lavin, as always, great to have your insights from here in Dubai. Robert Perkins, Platts in the UK, and of course Ram Narayanan in India. Great to have around the world views this early morning at 11 o'clock UAE time. All the best. Thank you so much.
Thank you. Yeah, bye-bye.
Thanks.